It's just amazing. And we've never experienced anything such where we're all involved. Here we have an imaginary asset type that does not exist, a globally homogeneous asset. One and only is gold. However, if you travel to an Indian village, the spread bid-off will be 50%. We have here something that can be traded over a mobile phone in the Cayman Islands, New York, India, the Philippines, Fiji, and Vancouver. Incidentally, it is connected to the system's value and storage on the internet's infrastructure layer. That decentralized database is an example of a public utility. Understood? Excellent. Today, its market cap is $2.5 trillion. By 2032, it reaches $100 trillion if we just extrapolate the trend rate of growth. Understand. In other words, this is the once-in-a-lifetime chance to amass an enormous fortune. This is the entire plan for my future that you see before you. It includes this. Another point is, you should not mess this up. You will never fall off this horse. Simply put, this is it. The big one. This is the most incredible macro gift ever given, and it will help everyone escape this mess they're in. Therefore, it is right there before you. Real Vision CEO Raoul claims that cryptocurrency is unique among global assets because of its uniformity. While the price of gold can fluctuate by as much as 50% from one country to another, cryptocurrency allows for frictionless trading across borders in places like India, the Philippines, Fiji, New York, Vancouver, and the Cayman Islands, all from the convenience of a mobile phone. Powell thinks this worldwide availability is a once-in-a-lifetime chance, calling it the greatest macroeconomic gift ever given that might change people's financial fortunes for the better. He views it as an opportunity to protect himself from inflation and monetary debasement. And post on CoinDesk emphasizes the outperformance of cryptocurrencies when compared to the internet, which supports this viewpoint, signaling the beginning of a substantial expansion period for the sector. In the first 6 months of 2018, the market value of cryptocurrencies increased by an astounding $750 billion, according to Architect Partners. Crypto token valuations are on the rise. Spot Bitcoin exchange-traded funds have launched successfully. Earnings per share in the U.S. have attracted over $15 billion, and publicly traded crypto companies have appreciated by an extra $1 billion after the first quarter, all of which are fueling this growth rush. With an announcement value of $2.7 billion, the second quarter shattered the previous record set in the preceding 8 quarters for total transaction value. Yeah, to reiterate what I've been saying for some time, I believe we are currently experiencing the changeover from macro crypto spring to macro crypto summer. These days, many mistake it for the season. It was tweeted by someone I just saw. No, I think it's because assets are driven by the liquidity cycle, which consists of 4 distinct phases. In such a case, the dynamics are typically still disinflationary and growth is sluggish to pick up speed throughout this transition. That is, in a word, macro paradise. Why? For the simple reason that it encourages governments and central banks to pump money into the system. You guessed it, the election cycle is all about this coding cycle, and politicians do all sorts of things during this time as well. They intend to provide sweets to the children. Also, they're stimulating, and that effect usually lasts into the following year. As a result, the ISM survey remains below 50 at the point when the macro began to pick up. Therefore, it is still slow. Liquidity has been rising for some time, and all of the forward-looking indicators are highly optimistic. The rebound on Main Street has not yet occurred, in contrast to the liquidity-driven Wall Street recovery. When profits rise across the board, that's when we're on Main Street. The amount of money available is slightly higher. When that happens, a plethora of profits begin to trickle into the markets. Therefore, debasement and liquidity aren't the only factors at play. Real investment capital powers it, and that capital has been severely deficient in many areas. That, then, is the norm for crypto summer. Thus, the crypto summer is about to begin. In addition, the banana zone is built upon it. Then things begin to spiral out of control. Everything that they do is based on the presidential election cycle, which has been going on since around 2008. It follows a pattern of a sell-off into summer, a sideways acceleration throughout the election because people are confused about its meaning. And then the markets rip regardless of the result. The anticipated outcome is irrelevant in the face of a shock. Consequently, the election cycle has played a significant role in the cryptocurrency and stock markets. Thus, we have reached that point in the cycle. So we're simply in that zone of, here we have a lovely chart pattern that is simply bringing together the data points where network traction is low or adoption has dropped dramatically, but is now beginning to rise again. The next step will be obvious in due course, in my opinion. That will probably happen at the same time as a few other liquidity-related things. In my opinion, the Japanese government must step in with the approval of the Federal Reserve. This will be beneficial for the Chinese, Japanese, and everyone else's business cycles in the future, as the current US dollar is way too powerful for this stage of the cycle. In addition, I noticed that you were on Twitter today discussing how the Fed must decrease interest rates. Take a look at inflation. The real figures are 1.82. Core inflation and core CPIs are currently trending considerably downward, while rates remain at 5.5%. With the delay it has, it is completely illogical. I don't think they'll worry if they underestimate inflation if that happens. After all, you can refinance your debt at lower rates now that they've put everything on the short end. Reserve funds have been issued by Janet Yellen. Consequently, her chances of returning to the 4-year cycle improve as she reduces rates. The Federal Reserve is solely concerned with two metrics: inflation and unemployment. Both of those fall behind the actual business cycle. That leaves the bulk of the Consumer Price Index (CPI), which includes unemployment and owner-equivalent rentals. All of that takes about 15 to 18 months. Therefore, the Fed is always cutting into the second year because they are following the lagging indicators, which are the factors that push down CPI. This is why they are always late tightening, even when the ISM is bottoming out today. The unemployment rate is now rising, which means you are in the upswing of the cycle. So far, I haven't seen any significant improvement. Halfway through the year, we could see an increase of 5% in the unemployment rate. The 12-month lag is relevant when considering trailing unemployment. Thus, the Fed will continue to decrease rates even as the economy begins to show signs of improvement. As a result, you should expect a strange world, as this occurs with every cycle when the ISM is at 55 and the Fed continues to cut wildly. And everyone is wondering, what the fuck is happening? Yeah, it's because they're both falling behind because they merely follow those two signs. Liquidity is picking up the pre-election cycle, which is a word that Julian Battelle and I used in the last quarter of last year. It typically causes a ruckus. Banana zones was the name we gave it thereafter. The banana zone was featured on the front cover of Global Macro Investor. Next thing we knew, the enormous banana zone was the summer and fall-autumn macro seasons. As you can see, Bitcoin's lovely chart goes vertical with every cycle. Well, it only resembles a banana, you think. The banana zone is a perfect example of this. As far as appearances go, it's a banana. The fact that it is meme-able and somewhat phallic makes it amusing. Thus, our hopes and dreams are all included in one banana, which is like a great yellow candle. Therefore, that concludes the liquidity cycle, also known as the code cycle for everything. Even while I don't engage in the Bitcoin halving cycle myself, it's essentially the same concept. There it is. And that is the crux of it. The secret is in that little golden fruit. I mean, I've briefly covered the two main assets, market technology and crypto, but that's about it. Numbers increase the most. Compared to the rest of human history, this era of technological advancement has been the most rapid. We have just unleashed on the globe an endless amount of human intellect, power that exceeds our current understanding by a factor of 10 or 100. Humans have been supplanted by robots. Our fleet includes self-driving vehicles. We can change a person's DNA. The only thing happening here is the book of science fiction novels, a la Land. And these are businesses that sell things. They are completely out of the conversation now. These are occurring in fact. And people want to put their money into vintage items. Hey, look at how affordable it is. Here, you wonder, what have you been missing? Think about that for a second, okay? No one is interested in your gold mine. Actually, once you understand what's happening, what this means is that stock prices won't stay high indefinitely. That doesn't rule out the possibility of bubble cycles, though. That's completely wrong. But pick the asset with the highest performance if you have to pick one in a world where everything is high.